Good morning, everybody. How are you today? How y'all doing? It's your girl, Tyra Jacqueline. And listen, if you happen to watch me live, I know it's a little early, but if you happen to watch me live, go ahead, throw a one in the chat. If you watch the replay, throw a two in the chat. And y'all, this won't be a long video. So, now y'all know financial literacy, that's what I do, that's my game. And I take a lot of pleasure in helping people become more financially savvy, having better relationships with their finances, become a little smarter with them and making your life a little bit easier. How can you make your life a little bit more easier when it comes to finances? So, overall financial literacy, that's what I do. A lot of y'all know me for credit, personal credit, business credit, yeah, all that good stuff. But what some of y'all don't know is I actually worked for your favorite alphabet boys for a decade, right? And the alphabet boys I'm talking about is, you know, the April 15th alphabet boys. So I worked for them for a decade. And just like with credit, I see people, they make a lot of mistakes that's kind of unnecessary. And it can cost you more money because of it. So I'm gonna give y'all a tax tip. Okay. So please understand. I want to do away with this myth because I've heard people say this out of their own mouths that they want to wait until the end of the year, meaning April 15th, the end of the tax year, to actually pay their taxes. Oh, I'm just going to put money away and I'm just going to pay it all together when I do my taxes. But this is what you're doing to yourself when you do that. So if you owe the alphabet boys $1,000 or more, you are expected to make estimated tax payments. And this doesn't matter if you are self employed, W 2, independent contractor, it doesn't matter. But especially for my self employed folks or 1099 independent contractors where you're not having any withholding come out of your paychecks, out of your commissions. So you're expected to make estimated tax payments if you're going to owe them $1,000 or more. When do you make these estimated tax payments? They are due April 15th, and this is quarterly. They're due quarterly, 4 times a year. So they're due April 15th, June 15th, September 15th, and January 15th of that next year. Now, when you don't make estimated tax payments and the IRS, their system calculated that you should have, you will get a penalty called failure to make estimated tax payment penalties. And not only do you get penalized, there's also interest when it comes to it. So anytime you owe the alphabet boys, there's always going to be interest as well. That interest will always accumulate as long as there is a bill owed. Doesn't matter if you're on a payment plan or not. So what ends up happening is by not making those quarterly payments, you're always going to owe the government more. How do you save yourself from that? Make your quarterly payments. Now, if you're like, okay, well, I don't know how to calculate my estimated tax payments, how should I do that? This is what you're going to do. Your estimated tax payments, for the most part, are based on the prior year. So you're going to take 90% of what you owed last year, break them up into 4 payments. And that's what you're going to use for your estimated tax payments. Now, what if you made a significantly amount of money this year than you did the year before? And now you're underpaying your estimated tax payments. So what you do in that sense, you're going to file a form called 2210. And what the 2210 will do is they may help alleviate some of that bill for those estimated tax payments. Because here's the thing, you don't know year to year how much you're actually going to make. Because it happens. Some folks may make, I don't know, $30,000 one year in their business. The next year they might make $60,000. Do they know they're going to make that? No. So you file that form after your tax return, the 2210. Now, please understand that estimated tax penalty is based on the original tax return. So even if you come back with an amended tax return, you're not going to get that penalty alleviated because it's based on your original tax return. Unless you file another tax return before April 15th. Okay, received by the IRS by April 15th. If you make a second tax return for the same tax year, that's called a superseding tax return. And that will take precedence over the first tax return. And if you have a reduction in your estimated tax payments from that superseding tax return, then that's what will be followed. Now, if you initially get a bill from the first tax return, and you probably might think, oh, well, I made a second tax return. I did a superseding tax return. Why do I have this bill? That's because that second one has not been processed yet. So please understand, an amended tax return is takes like about 5 months to get processed, maybe even more. Believe it or not, they still backed up from COVID from a few years ago. So with that being said, you do yourself a huge favor by making the quarterly payments. Just make your payment sure. And then another thing is too, if you severely underpay your estimated tax payments, you'll still get a penalty as well. Okay? So keep these things in mind when you're filing your tax returns. Y'all got any questions? Y'all know who y'all can come to. Okay? And you save money by paying. Everybody knows you save money by paying your bills on time. Just like with anything else. You pay your utilities late, you're gonna pay a penalty. Pay your mortgage late, it's gonna be a penalty. Pay your rent late, your car note. There's always some type of penalty when you pay late. Period. Except the alphabet boys, of course, y'all know those are the people y'all don't want to be ever in trouble with. And even if you are, nobody or no entity is above communication. Give them a call. If you can't pay, give them a call. Now, when you call them to set up a payment plan, please understand. Remember, I told y'all about penalties and interest will continue to accumulate? Yes, they will continue to accumulate until the debt is zero. That's how they operate, period. And just like anything else, when you don't pay, they make more money off you when you don't pay on time. So, um, as I stated, y'all got any questions or anything, hit me up. Let me know. Inbox me. Text me at that number below 844-243-4901. I'm out here doing had myself a little walk. Make sure I'm getting some more steps in. I just left the gym. It's nice outside. So before I go in and get to work, I figured I'd come give y'all some sauce. And I'll do that. I'll do this some more often. You know. So just wanted to make sure you do understand. It doesn't matter if you are a W-2, 1099 self-employed person. If you are expected to make estimated tax payments, you're going to get the penalty. Even if you got a refund a year before, the system actually doesn't know that. So you're going to end up with, so say if you got a refund a year before, but this year you got a 1099, you've been doing some Ubering and Lyft or Instacart, whatever, DoorDash, and now you got this extra money. Oh, but that extra money you made, now you got 1,500 in taxes you owe now. So what's going to happen is you will still get that penalty, even though you didn't make the estimated taxes from the year before because you got a refund. But the system doesn't know that. So you can still get alleviation from that penalty as well because you didn't know. So as usual, do your due diligence. Talk to your tax preparer, your accountant, your CPA. Thing is, the positions I had when I work for the Alphabet Boys, it gives me advantages over other tax preparers. It really does. So, because I can help you set yourself up better for next year and all that good stuff. That's what I used to do when I used to service the phone. Tell people how to set themselves up better. Because one way, another way, is to help alleviate yourself from the estimated tax payments. If you have a W-2 job, you need to correct your W-4. Okay? And all them people that told you to claim 15 people on your W-4 and all this stuff, don't do that because you're setting yourself up for failure. You really are, especially when you don't have enough credits, what we call refundable credits and all that good stuff, even with non-refundable credits. I'll talk about that in another video. When you don't have enough things to help you reduce your tax liability, you're going to get yourself in trouble. So a single person who, basically they W-2 job not getting it, and y'all know we all been there, single person with no kids. Your W-2 job's not getting it with your bills, or you just tired of being broke. All right, so you going to go out, you want to DoorDash, you want to Uber, you do all that stuff. Now you done made some extra money. And then because of that extra money, you might owe some taxes. But remember too, now that you are an independent contractor, you can take deductions. That's why everybody should have some type of home-based business, okay? But for those of you in that gig economy, because these are gig economy workers doing your DoorDash and Ubering, but they're 1099 independent contractors. But now that you have that, you have the ability to take expenses. So when you're doing your taxes next year, make sure that your tax preparer is properly taking your expenses. And you don't know exactly what to take, but anything that's related to your business is deductible. I was talking to one of my business partners a few months ago, and she tells me, like, yeah, my tax preparer, yeah, they filed the Schedule C, but that's all they did. I'm like, well, what about your expenses? Oh, she ain't say nothing about expenses. So, yeah, y'all, let's get that together. But I'm telling y'all, for those of you who just worked the W-2 job, at home-based business, or doing something like Uber or something like that, there's so many advantages because you can get you get your tax liability reduced just from that, just from doing a home-based business, or just from working the gig economy. It's worth it because you are ended up making more money, and you can get your tax liability reduced. So, with that being said, that's your financial tip for today. I know tax time is coming up soon. Y'all know January be here before we know it. Just wanted to give y'all some nuggets, some gems. Y'all got any questions? Y'all can contact me, inbox me, text me at this number. I'm accessible. Okay? Need some help? Let me know. All right. So, y'all have a great Wednesday. It's Hump Day. It's Wealthy Women's Wednesday. Wealthy Winning Wednesday. All that good stuff. And I'm going to do a few more laps. Then I'm going to go in the house, y'all. All right? Have a great day, y'all. Make today purposeful. Have a great day on purpose. Always.